Hey guys, hope all is well at your boy Mark. I'm bringing it back to my roots here, doing some education. Over the last few closings, we've been Kurt and I, when we've been at the closing table, I've asked people, what did you like about the process? How did you find us? Tell us a little bit more about yourself. How did you decide to work with Great Homes ATL? A lot of the responses was, I love you guys, love your personality, love that you're a family, love Mark's home tours. It really gave us an idea of some of the communities that are going to be potential communities for us, or the look that we were looking for. The cocktails with Kurt, your lives, or all those type of things. But I think the overarching theme was people that have really embraced Great Homes ATL, who have embraced us and what we're about, stumbled upon us and actually took the time to, look on Instagram TV, look at YouTube, look at our Facebook and Twitter accounts, and stumbled upon my education. And one of the things I wanted to kind of get back to is an updated version of that education. I think about maybe 2 to 3 years ago, I did what I'm gonna do now, but just an updated version of pretty much the 5 or 6 things that you're going to need to become a homeowner. And people actually listened to what I was saying. They saved the videos, they bookmarked it, they watched it with their spouse. Literally people would say, like, it's kind of weird to say this, but my husband and I watched you in bed at night, providing the education that we needed and the motivation to actually reach out to you and start this process. So I figured, hey, let's get back to the roots. Let's have some content out there that you guys can, take a look back at anytime. If you're looking at this now, if you need to pause it, if you need to watch it cumulatively over a weekend, hopefully these videos will be very helpful for you. So this very first video is going to be about the very first thing that most people ask about. One of the most important things that you're going to need to become a homeowner, and that is income. Now, people will say all the time, hey Mark, hey Kurt, in our DMs. Sometimes people will just drop a call to us. Early in my career, I would pick up those calls and literally speak for an hour and a half. People would say, hey Mark, how much income do I need to buy a $300,000 house? How much income do I need? And you try to explain to people, and then sometimes they would be clients, sometimes they wouldn't become clients, and found like it was kind of a waste of time because time is valuable, right? And I figured, hey, let's just make content. Let's make educational videos that people can kind of understand, and understand that each individual person is going to have different circumstances. So I want to give you generalities, but I want to kind of enlighten or lighten up your mind to some just generic, general rules of thumb that might be like, oh, I didn't know that, or oh, that makes sense. Oh, now I'm ready to go for my pre-approval. So let's get into income. So income basically consists of 2 main ways that people get their income. Typically, if you work for an employer and say they provide like a 401k plan or a 403b, health insurance, you're salaried or hourly, typically that person is what's called W-2. That means you get a pay stub most likely every 2 weeks. It doesn't really matter what your pay cycle is, just as long as it shows that you, at the end of the year, get a W-2. You're a pay stub type of employee. That is probably, I would say, 75 to 80% of most home buyers. Now, this pandemic, when I'm taping this in August of 2021, has taught people to tap into their entrepreneur spirit. Some people have left corporate America, and we'll kind of get into the intricacies of when you should leave, when you should not leave, what's the difference between a W-2 and a 1099. So let's start with the W-2. So W-2 employee, again, somebody that gets a check from an employer. They work for somebody in basically for providing your skill set, providing, the hours that you work. They set a salary for you or an hourly rate. If you're hourly, you might have availability to do overtime after 40 hours. Usually that's time and a half. So it just depends on your situation. So a lender is going to ask you, how do you make your money? Because we need to verify that with your HR department, through your tax returns, possibly pay stubs, all those type of things. So W-2 is one of the main ways. So let's just say you make salaried $50,000 a year, $70,000 a year, $150,000 a year, $1 million a year, right? That is just one piece of the puzzle to calculate how much home you can afford. But let's just get that out of the way. If you're somebody that is currently unemployed, if you're somebody that is currently furloughed, then this does not make the most sense, right? You would say it's kind of common sense, but we do get that question a lot. So if you're on furlough or you've had a gap currently in your employment, now is not the time. But if you have been on a job and say it's, say for 2 years, right, that you worked as a nurse in New York City, and you transferred to Atlanta and you started, because you wanted a fresh start and you wanted to potentially buy a house because it was not affordable in New York. And you started the job at, let's just say, Grady Hospital or Piedmont Hospital or Wellstar or something like that. And it's in the same field that you were in. You were a nurse in New York. You're still going to be a nurse. You're not changing careers. As early as 2 pay stubs, you can close on and even really, to me, I would say start the process of looking for a home. Now, if you were like a truck driver and now you transition to be a nurse, those are 2 totally different fields. Those might require more time to show, established income in that particular field. But if you're, like I said, in the same similar field and you've transferred from out of state into a similar career, if you were a teacher up in out in LA or in Chicago or Philadelphia, or here in Atlanta and just change school districts, but you can show like there's been some consistency in your field, you just started a new job, you're going to be fine being a W-2 and showing it as a W-2. So that is the easiest way. Now there are some intricacies, like I said, if you change careers, if you're in a whole different area, that's when you really want to speak with our, we have basically 3 or 4 really, really good lender referrals that have closed deals with us, that have provided great customer service, they have great rates, all those things combined. So you'll just want to have that conversation. But again, my job right here in giving you this education is to just give you generalities, broad-based tools that you can use. So that's W-2. Now, the other area would be what's called 1099. Who is a 1099 employer or employee? That would be me, right? I'm a business owner. Kurt's a business owner. We no longer work for a corporation. We make our income buying and selling real estate. Maybe you are a hairdresser. Maybe you are a restaurant owner. Maybe you are a bartender. Whatever the case may be, you basically do not get your health benefits. You do not get most likely a 401k or 403b. You're basically as good as your last sale, so to speak, or your last gig. Whether that's you're, a musician, a movie director, like I said, a real estate agent, restaurant owner, Uber or Lyft driver. Like there's so many different fields where you're considered an independent contractor. Now, when I talked about the W-2 and how it could be as quickly as 2 pay stubs, is a totally different ball game with 1099. And this included myself too. So when I started GreatHomesATL, or when I became a real estate agent, 6 months or a year, if I had a great year that first year, guess what? I would not be able to buy a home after year 1. I would not be able to buy a home 18, 19, 20, 21, 22, or 23 months of having great, showing great income. Why? Because lenders require 2 full years of proof of basically income, which is your filed tax returns, both state and federal. And if you take a step back and you might say, well, that's not fair. Why, is it a disadvantage compared to W-2? Yes, layoffs happen. Yes, being fired happens, all those type of things. But you have to look from a lender's perspective. They're about to lend you out $150,000, $400,000, $700,000, over $1 million, right? I don't know about you, but if cousin Pookie asked for $500,000, I'm gonna want to feel pretty darn good that they're gonna have steady income coming in to pay my loan to them, right? So that's how the bank looks at it. They have set up parameters, mortgage lenders and banks, that a good gauge of, future earnings would be 2 years, because you could be starting a company, and we've been there. If anybody started a company, and that first year you might have just broken even, or you might have made 40, 50, 60, 70,000, right? Or you might have had a great first year and made 100,000. But what did you write off, right, for taxes, to save on your taxes? Because they're going to take the profit and loss. They're going to take the difference, what you told the government after write-offs you made. So if you made $100,000 and you wrote off $50,000, it's going to show $50,000, not the $100,000 you made, what you told the government after write-offs that you made. So that would be $50,000. In year 2, you made $150,000. You had an even better year. The company is growing, right? You're doing well. Again, you wrote off another $50,000. You now showing $100,000. So they're going to take that $50,000 and $100,000 divided by 2, and it's going to show going forward to get qualified for this loan, you're based off of, you're going to be making $75,000. Most likely, it could, over the life of 30 years, a 30-year mortgage, chances are you're going to have some good years, some great years, some really bad years, but they're going to average that for over the 2 years. So the lesson that I want to end this with is the W-2, the 1099, 2 years for 1099. So that means if you're in a W-2 position and you're like, you know what, I'm just tired of working in this field, I want to change fields. Ooh. Now, if you want to buy a home, right? Don't go into a 1099 job when you're trying to buy a house. Don't switch careers in a totally different field, because it might take you longer, even in a W-2, to qualify. So make the home ownership, closing on a home, the top priority. After you get those keys, hey, you can do what you want. Some people will still feel safe, and other people will be like, this is the time to take that risk, to maybe open an LLC or an S Corp, or invest my money somehow, some way differently, but not until you get your keys. So that is income. That is the first thing in our talk about the steps to home ownership. All right, I'm gonna leave it there, and we're gonna go into the next topic. Hope you're enjoying this. Take notes, and we look forward to welcoming you to the family. All right, I'll talk to you soon.